All right, we're ready to start here. This is Tom Joseph, and I have Marcus Reinhardt with me as well. Uh, Welcome to the Dynamic Trend webinar. All right, so what I would like to do is I do want to make sure that I cover what's more important to you. Um, so Before I open up the session to go different directions, I just wanted to touch base on the options volume map one more time. And mainly, with the way the markets are right now, I just want to go through a couple of things that you got to be aware of. And that is when you set up the options volume map, there's a couple of things that you can do. One of the things you can do is you can see multiple months. I don't have a problem of looking at two different months. So May and June. Keep in mind, the farther you go away, it's less. I give preference to the closer month, but there are differences, and I'll show you how. So if you look at this market here, and we have this tool that it's called the training mode that allows you to step up and put it on any single day. So we'll start it right here. So on that day, on that high, it was a down bar. And if you put the options volume map, what you will see is that there wasn't any major numbers because it was 1.1 on the call side and 1.3 on the put side on the next month. So this really doesn't mean anything to us. We'll just let it go, and then we'll go forward another day. Now what happens is the market made a second down day, and we move it to that day to look at it. Again, there isn't anything, unfortunately, other than we know it's two down days in a row. You come to the third day, and you move it up there. Now you're going to see a bias. So at this point in time, you can see the options bias has increased. And so what we have to keep in mind is that regardless of what we think of the market at this point in time, because there is a overwhelming um, options volume to the put side, we have to just draw a line there um, underneath the low, and just for our own purposes, know that for if it goes below that line, that's not a very good thing. And so we let it go, and we see that once it broke the line today, it made tremendous lows. So you can catch these kind of things at different areas. So for example, if you come into this high, okay, you will see that that had a 1.6 ratio down on the put side. So if you were to draw a line on that bar from the following bars, as soon as that break happens, you should be able to join the club or be short, or if you're long, try to get out of the long positions and so forth. So that's very important in the options volume map. The other importance is, like for example, yesterday for Whirlpool. Okay, so you can see that the earnings was coming out, and the earnings was coming out after the market closed yesterday. But if you look at the option volume map, you will see there's a very little puts, more calls, and the ratio is greater than 1.6. So this shows you a tendency that stock could go higher, and so we got to be careful of that. Same thing with Sherman-Williams. So if you look at it 2 days ago, you will see that the put volume is increasing. Yesterday, before the earnings, it was 3.3 on the further month, 1.4. So all this indicates that the chances are that it's going to be a lower opening after the earnings. Same thing with WAT. You put that on the day of the earnings, you can see that there was 821 puts, and the ratio was 10.5 to the downside. So you would expect that stock to drop. So this gives you an idea on how to trade going on a daily basis if you have to. One of the other things that you have to really be cognizant of is, I'm going to take the options volume map out of this. and I'm just going to put the TSL study on. So the key thing about the TSL study that you have to notice is, for example, let's look at WHR. So if you come in here, you will see that from this point in time through here, the TSL indicates that it's negative. All right. So when you have a negative TSL, you need to look for any way to short this, any way to be able to sell this. That's what you're looking for. And let me show you a few things that you can do on how you could enter a position like that. First of all, we have a study called the pivot study. So if you turn on the pivots, what you will see is that we have SP, which is a strong pivot, WP is a weak pivot, and so forth. But at least it gives you areas where you can draw Fibonacci ratios from. And the ideal Fibonacci ratios are 38, 50, of course, 61, and 25%. People use 25% a lot. So what you can do is you can bring in your Fibonacci tool and click this high to this low, and you can see that this rally here is contained within 38% of the previous decline. And the reason you're even looking at it is because right here, it indicates that this is a weak market. So you're looking for any reason to establish a short position. So Fibonacci ratio is definitely one angle to go at. The other angle is you can put on the LA wave turning points, and depending on what the level is, sometimes you're not going to get a yellow or a blue. So this is all you could get at that time, and that's okay because you have the strength underneath here is very weak, and therefore you should keep that in mind. Well, how can we trade with this? Well, the best thing to do is you come to your matrix, okay, and I'm going to set it up like this, and I'm going to set this up for all symbols. Then we're going to come to additional filters, go to LA wave, and Tom's strength levels. And I want it to be, say, for example, greater than 2. And I'm only going to look for stocks greater than 50 for now. So these are the stocks that the TSL is greater than 2. So what you do now, next is you put up a chart. And I'm going to take the options volume map off there and put the TSL study. I'm going to group this to a yellow. So now when I click on the symbol, so you can see I'm looking at stocks that are greater than 2. I can come in and say I want it greater than 3. So now what happens is if I click any one of these stocks, those will be stocks that has TSL that's greater than 3. So what you're looking for is areas where there's, like, for example, this is an area that you really want to be short in. So if you get a chance to short this market somewhere here, that's something that you want to take, keeping in mind that you can do Fibonacci ratios, you can add LA wave studies to it. So you may get a yellow or a white signal. Fibonacci ratio wise, from the previous pivot to the low, you're right at 38%. So these are tools that you can add as you go along and start using them. So for example, let me bring up a couple of different markets here. Now you're going to also have periods where the LA wave signal is the TSL is so strong for example, EGN. So if I come in here and type in EGN, what you're seeing here is from this area up through here, it is very strong. And all you're trying to do is any signal that you can get in that direction will give you some good movements. So the TSL is something that you should use frequently just to get an idea where the strength is. Okay, let me bring another one here. HFC again. While this strength was in progress, okay, this signal here, that's a very important signal. Okay, and all through this period of time when this market was running, you can see that the strength is always greater, and it never went to the negative side because this bar here indicates that the TSL is still valid. Okay, so during this period of time, the signals that you can get are going to be very strong signals that can get you some profitable positions. We'll look at, say, what if it is TSL below 3? So I can come in and I'm going to look at a couple of these issues here. Okay, FDS. So you can see that when this was strong, that signal was a good signal, and now it's going back to the weak side. From here to here, it's weak, and therefore that signal is even though it's a short signal, that's a signal I would take because it's going in the direction of the TSL. All right, let's give me some directions. What tools would you like to see? If you can type it in, then I will take your direction and go from there. Elliott wave entries, yes. Okay, so on the Elliott wave entries, basically there's two or three different things that you want to focus on. So if you see a market, and of course you always want to have the TSL study underneath there, that has a strong bias, during this period of time, and you get a signal. So let's just isolate this signal and see how we would trade that. So if you click on it, it shows you an entry point and a target. This entry point is user settable. So if you right click on the study itself, you can see that for each one of them, there's a conservative or aggressive or signal bar. So I'll go through that. When you get a signal, like say for example, this is a pivot point, right? I mean a point that has an Elliott wave signal. Immediately what it does is to the right of that, it draws two lines, and I'm just going to fake some colors here. So it'll draw two lines, something similar to that. The bottom line is the aggressive line. That's the aggressive line. The top line is a conservative. So if you're in the aggressive mode, if in the subsequent, as the stock trades, if we can get past that, you would go long. If you're in the conservative, then it needs to go past the high end to take the trade. So here, if you notice, the purple line, because it's a purple signal, the bottom edge is the aggressive, the top edge is the conservative. So you can take the trade based on how you want to do it. And Elliott waves can be loaded back as long as you want, as long as you have data. All you have to do is go to Format, right click on the chart, go to Format, and load bars. You can load 9,000 bars. So I'm going to load 9,000 bars, and let's put something like, even FDS. So if you look at it, I mean, it shows you signals for the last 1996. Okay, so you can go through them and see. So this is a trade that you could take because the TSL is strong. That's a small trade you can take. This is a valid TSL right here because of the blue line here. So therefore, that trade is good. And so forth. So you can come in and take trades. For example, this short is a good short. As you go along, you look for isolated areas where the strength is strong, and in that period of time, if you can get the trade, take the trade. I usually leave the orange trades alone because orange trades take a long time to mature. So for short-term trades, if the TSL is strong, I don't have a problem with the purple. I like the blue or the yellows quite a bit. So you can go back and test the theory backwards, and you can say, I want the aggressive or I want the conservative and so forth. The other entry point that we have is called a signal bar high, and that is, so if you come to edit LA wave and you come into here and instead of conservative, I want signal bar. So in that sequence, what happens is the bar that gives the signal. So if this is the bar that gives you the signal, if the high of the bar is taken out, that's a trade. So in this case, you will see when you turn it to a signal bar, there's a single entry line. Okay? Before there was two entries, now there's only a single entry line because it is the signal bar plus a certain amount of prices, and we decide what that is based on the volatility, and that's where the entry is. Now, if you were to take this trade, of course, you can see that this is the aggressive and conservative, or if you set that as, go to edit study, you set that as a signal bar, then as soon as the high of the signal bar is taken, then you're going long. Okay, what is the difference between spread and spread strategy? The spread allows you, for example, if you have IBM that you're looking at, and you as a trader say, you know what, I really want to put a straddle on this one. So I can come in and say, take all these other ones out and say, I want to get a straddle. So I come in here, a long straddle, and it'll give me the front month and the straddle to take. I can come in and say, you know, I want to use more than a couple of different strikes. I want to use different months. Or I can come in and say, I don't want a straddle. What I really want is a bull call spread. And because I've got two different strikes, I get more. If I only use one strike, I only get one because I can spread a 62.5 to 65. If I do another one, it goes 60 to 62.5, 62.5 to 65, 65 to 67. I can also come in and say, make that by 5 strikes. So now it's 60 to 65, 62 to 750. So this is if you know exactly what kind of spread you're looking for and you want to establish something, you can use this and come in and right click. Now you can look at the risk graph and analyze it and so forth. Whereas on the strategy, what it does is if you have a chart, say for example, I have IBM and let's just assume that for whatever reason that you think it's going to go higher. So if in your mind it's going to go higher, say to 155, say sometime by June, I can right click right here and send it to a strategy builder, and it automatically puts the target price where my cursor is. So my cursor was at 155.73 for the vertical, and it knows based on the horizontal what the time frame is at the bottom. So I'm looking for June 3rd for the prices to get there. Using that information, which is this target price and the date, what it does is it knows because the stock price is at 145, you're looking for 155. So it knows that you're looking for a bullish strategy, and it'll give you all the bullish strategies here, but it'll give it to you where it'll show you what your risk is, what the P&L is if the target is met. If you want further Greek values, you can expand it, look at that, cycle through different risk rewards and where it'll be profitable. So if I was to buy this, I'm going to be profitable here. Or if I want to put a bull put spread, what is my risk? What is my reward? And so forth. Now, on the same process, if I just come in here and say, IBM is going to go lower, I don't think it's going to rally, okay? And let's say you think it's going to go to 140. All I got to do is near the 140 level, say 139.65, and let's just give it till June. If I right click and send it to a strategy builder, the 139.48 target is put in along with the month. Now it knows that based on the target you gave it, it has to be all bearish positions. So you can see, based on the target, it'll either give you bullish or bearish positions. So that's the beauty of the strategy builder, is you don't need to make a decision what spread you're going to trade. You don't need to make a decision if it's a bullish spread you need to do, or just come up with a target and a time frame, and based on that time frame, we'll pick the best strategies for you for that strategy. Whereas on the spread, that you have to decide what spreads are you trying to look at, and it'll give you all combinations. So for example, if I want to look at a bull call spread, but I want to look at for May 18, and I want you use 6 strikes on it. So now what happens is this particular spread, it's built every possible combination. It shows me what my max profits are, what my max risk is. At any given time, I can come in and use a risk graph. So the risk graph, what you have to be careful is the purple lines on each side. That's one standard deviation of the prices. You don't want to be profitable after the one standard deviation. You want to be profitable right here in the middle. The dotted white line is the current prices. You want to be as profitable as you can, close to the current prices. So same thing here. If I'm buying a long call on IBM, okay, it selects the first month and the first strike, which is at the money. Immediately what I can look and see is I'm going to get profitable somewhere here at 147.97. My one standard deviation is not till there, and my risk is 296. So a lot of people will make mistakes, and what they'll do is they'll come in and say, oh, you know what, 287, man, that's just too much, okay? So I'm going to come in and buy a really cheap one. I'm going to buy a 165. So now, or let's even go to, say, 160 call. So what happens with the 160 call is my risk has gone from here to this orange line here. So I have very little risk because I'm only putting 10 cents on that trade. But the odds of that being profitable, I have to go past the one standard deviation to be profitable, because the purple line is one standard deviation. That is not a very good trade, because what happens is on the probability of breaking even, it's only a 10% probability. Whereas the other one has a 41% chance of making money. So the break even or being in the money at expiration is very important. 10% in options, you can kiss it goodbye. The odds of that actually making money is only 1 out of 10. And then between theta and so forth, it'll wipe you out. Okay. Whereas so you want to be near 45% possible, for at least 40% is where you want to be. Can you day trade futures with this? Sure, let's take a look at it. All right, so I'm going to open up the E-mini today. So that's ESM18, and I'm going to, since it was a fast market today, ESM18. Okay, I'll take off all the other stuff out of here, and I'll just look at it as a 3-minute basis because it was a very fast market today. And I'm not sure why. Just bear with me 1 second. Close this out. Open up. Okay. Take that out. And I want to make sure I'm not loading too much data. That's good. Okay, so here's a 3-minute chart. So if I put first of all, you can't do anything until you put the TSL on. So you put the TSL on. So what you will see is that the market opened somewhere at 9:30, but right from about 8:40 in the morning all the way till about here, and this is valid as well. In this period of time, the TSL was negative. So I didn't have any business going long on a 3-minute basis because it had to be short. So I can come in and add my early wave studies, and depending on how aggressive that I want to be, all of these short signals should be taken. So that's how you day trade. It all depends on what exactly do you want to do. Okay, that's a 3-minute. Okay, forget it. I'm trading on a 5-minute. Okay, great. So let me clean all that line out, and I'm looking at the TSL. I'm still from here. I'm moving to about right there, and say from about right there. Okay. During this period of time, I want to take in. I don't want this long signal because it's against my TSL. I'll take this short. I'll take that short. I'll take that short. I can take that short. I can click on that and see. So this one, what happens is you took the trade, you entered either the aggressive or conservative level. The target is only here, but it was able to trail the stop and catch the entire movement down. So that's what it allows you to do. Now you're let's say you're a little longer trader and you say, 5 minutes is not my cup of tea. All right, let's just go to a 10-minute. Again, let the TSL be the guide all day today from here through here. And so if you put the LA wave on a 10-minute basis, you had a buy here, which you cancel out. You don't care. That sell you would take. And then if you click that, you see that it trailed you all the way and kept you short all the way from 2670 down to 2620. So you just have to be very careful with the TSL. Because that's what is going to make a difference. Because without the TSL, so for example, let's say I'm going to trade the June crude oil, I'm going to trade on a 5-minute basis. Okay. So again, if you simply look at it, you will see that right here from 1140 all the way till it started getting up here, the TSL was down. So on a 5-minute basis, there's my signal. Now this did not trail enough to get you anything more than the target level that it gave you. But that's fine. I mean, that's, you just take what you can and you run with it. And sometimes what happens is, for example, on this 15-minute, when there's, let me load up a little bit more data here, 2000. So look at this entire period of time. That one you wouldn't have been able to get in, but this one you would have been able to get in and kept you in. And it takes whatever it can. what the LA wave does is it is looking for the strength, and then when the retracement comes in, it is trying to see what the momentum of the retracement is as compared to the rally or the previous move. And it is using an LA wave algorithm. It's using Fibonacci. So for example, if you were to do a Fibonacci ratio from this low to that high, that's a 50% pullback. So all of those things are generated into the calculations along with Gann time cycles and so forth. And boom, right at that low, we give you the signal, right on that low. So if you want to use the signal bar, let's say we switch that entry to a signal bar on the yellow, we'll switch signal bar. Now what happens is that entry is, as soon as the high of the signal bar is taken out, right there, you go long. So you went long at 67.79, and if you took a profit anywhere inside the target, that's still a full dollar, which is $1,000 on a contract. So that's how you can that's how you trade the futures on a day trading basis. What do the different signals mean? Well, the different signals simply tell you that if you go to the LA turning points, each signal, unfortunately, it just shows you display short-term, medium-term, dynamic, and so forth. We should probably put it up here, but we didn't. But if you go to the matrix and just write this down one time, if you go to the matrix, you drop this down and go to LA wave, you can see the medium is an outlook for 30 to 35 bars. The short term is 15 to 20. The long term is 40 to 45 bars. So whatever time frame you're trading in, the mindset is for those number of bars, this is a signal, is the way we look at it. And the nice thing is you can do this on a daily. You can do this on weekly. So for example, if I put this this is the crude oil. If I put this on the daily chart, what I would see is I have to put the TSL. So as soon as I put the TSL study on, now that's a good strong oscillator. This is valid because of this line here. It's valid all the way through here, and right about this is where it turns. So between there and there, the signals that the daily generated was good. This one didn't, because if we use a signal bar or whatever, it never generated a trade. This particular one would have. And that one, so the trailing is very important, that if we can get through that target level, so if you were to put multiple contracts on, you would take some off as soon as you get into the target, maybe in the middle of the target, but then see if we can. The way we trail it is not a price trail. What we're looking for is we're looking for strength in higher time frames. We're looking for momentum increase and so forth. And when that happens, the trail kicks in, and the trail is telling you, hey, we picked up a signal that we thought was for 20 or 30 bars, but hey, we think it's going to go much longer. Okay. Do you have a customizable, dedicated horizontal line to use and chart for support and resistance? Well, I'm not sure if this will answer your question. So this tool will draw you a horizontal line anywhere you want to, and that line, if you hold the control button, it'll draw a straight line, or you can move it to any angle you want. You can right-click on it. Change that to be orange. You can remove it, copy it, put it somewhere else. Just drag that. Once you click it, you can drag it, put it somewhere else. You can also right-click and say, make that it's a segment, which means from X to Y, or you can make it ray. Ray means it just goes forward in time, okay? Or you can make that extended on both sides. So now that line goes in both directions. Now if you can also draw ray lines that extends to the right, or this one will extend both to the right and left, and you can make it vertical. If you want to make it horizontal, you hold the control button down for the second point, and that makes it horizontal all the way through. hope that answers that. Yes. Does this chart open inside of TS? No, the TS will run side by side along with it. As soon as you launch this application, so just like some of the TS applications, if you go to their option station, it launches a different window. So this launches a different application, but it's in connection with the TradeStation API and so forth. In that respect, so for example, if you're in a risk graph, for example, for IBM, and you set up and say, you know what, I'm going to take a long straddle. And you look at it and say, that's good. So all you got to do is right click and it'll create that trade ticket for you as well. Or you can just open up a trade ticket and say, you know what, I just want to trade a condor. Boom. We'll build an ideal condor for you. But if you don't like the month, you can change the month. If you don't like the strikes, you can change the strikes and so forth. So, but the interaction with TradeStation is there, and you can run TradeStation side by side or minimize it or whatever. Um, does it have alerts? It does not have alerts at this time. Let me talk about the skew for a second. Um, the easiest way to look at the skew is using the skew chart. Okay, so we have IBM, and I've got the May 18th, and I will come up with a June 20th and the June 15th. All right. So a couple of things that you want to know is that when you're selling this dotted line in the middle, I'll make this big full screen. This dotted line in the middle is the strike price that's closest to the money right now. And this will show you what the implied volatility is for that. Okay, so we're at about 16%. And as you go on the strikes to the far right, that implied volatility should be higher. And if you go to the left of it, it should be higher as well, which creates what's called a smile. So this is a smile. And this is a perfect candidate for when you do debit calls. So for example, if I come in here and I want IBM and I want to do a bull call spread, what I want to make sure is that my volatility between the two legs are not too far apart. And the skew kind of gives you a tendency on that one. So what you're looking for is the higher ones you're selling, the legs you're selling has to be slightly higher than the ones that you're buying, and therefore the reverse of the skew doesn't hurt you. Uh, People pay a lot of, there's a lot of lip service to the skew. For all practical purposes, unless you see the skew being completely out of whack, as far as the profitability goes, you're talking about maybe a 2 or 3% difference in the position. Hello? Um, the sound the sound should be on. Is anybody else having trouble hearing me? Sound is good. Okay. So it's not on my end. Okay, sorry. Okay, but more than the skew, I personally would like to lead you into the decay tool. So the decay tool is very important to know in the sense that every option, so let's look at an option chain and then just make sure that we understand this completely the way it needs to be. All right, so I'm going to bring a spotlight, and you should be able to see the spotlight on the screen. Do you see a red dot flying around? Yes, okay, good. All right, that's good. Thank you very much, guys. You guys are right on the button here. If I make it a yellow, let me see. Okay. All right. So when you see an option chain, in the middle is the strikes. So the strike that's highlighted on both sides, that simply means it's at the money. So if you look at up here, this is the current price of IBM, which is 145.79. So the strike that's closest to the current price, which is 146, that is the at the money strike. So you have the bid and ask and so forth. But if you keep coming to the left of it, you will see the implied volatility. The implied volatility tells you how much interest is there in that option. So if you're trading, say, for example, a 20-day outlook, you come up at the top here and you see a 20-day historical. Historical volatility is based on the actual stock historical volatility. So how is IBM trading? On what volatility, annualized volatility is it trading at? So based on a 20-day historical volatility, we're trading at 35. Let's say you're looking at to hold a position. This is only May, so 20 days will cover that. So you look at the implied volatility and it's 16%. It is lower than what the stock volatility is. That means this option is not overpriced. This option is actually underpriced because it is trading at a volatility less than what the historical is. So that is a very important tool to look at because when you look at, for example, if I change this to NVIDIA, bear with me, this will make a lot of sense here in a couple of minutes, okay? So if I was to use NVIDIA, and for the same May option, the 20-day on the stock is trading at 51%. If I was to trade the June, I got 52 days left to expiration. Right here it says 52 days. So the closest matching one I have is 60 days. So the stock on a 60-day basis is trading at 48% volatility. I come to the volatility and I can see that it's trading at 0.56, which is 56%. So the options are slightly, ever so slightly overpaying just a little bit more than what the stock's volatility is. So that is a difference to know which one you're using and so forth. Now, if you go back to IBM again, the volatility we talked about, but what is more important is this. Everybody should know what the delta is. What the delta is for this strike, the 60. I don't know why I didn't get IBM. Let me just get IBM. The delta for this particular strike at 145 is 0.56. What does that mean? That means if the stock goes up $1 tomorrow, your option prices will go up by 56 cents. If the stock goes up by $2, your option should trade 56 cents times 2, $1.12 higher. So delta immediately kind of gives you an idea. Oh, okay, if the stock takes off $10, this option will increase by $5.67. So delta is how much will the options go up for every dollar in the stock. But the most important one I want to point out is theta. Theta is minus 0.05. That means from now till expiration, the theta will drop the price of the option by 5 cents. You'll say, oh, well, if it drops 5 cents, that's no big deal. But if you go to the actual map of the theta drop off, what you're going to see is the theta as the days. So this is today, And when it goes to zero, this is the July option, when it goes to zero, the theta is going to drop from 5 pennies a day all the way to 10, 12, 15, 17, 20, so forth. So if you're going to buy this option, you do not want to be buying this option in this range. Because if you buy an option when the theta is dropping, a lot of the premium that you paid is going to vanish because of the theta decay. So your ideal situation is to trade this particular month somewhere in here. Now, on the flip side, if you're selling a covered call, well, you want to be in position for this drop, because for the covered call, you want the theta to work in your favor. So for a covered call, you don't want to sell your covered call here because you're only going to benefit for a little bit. You want to be in position between these two arrows for a covered call. So somewhere here, you are expecting the theta to start dropping and you're going to start making money on that call that you sold. If you sold it here, from here through here, you're just sitting for almost a month, and your option is not dropping in prices because the theta is not dropping. So when you're doing a covered call, you want to make sure that you pick a month. For example, if I come in now and do a May 18th, you see that I don't see the arrows. So for a covered call, that's not a good call. If I go to June 15th, yes, I'm inside, I can see the arrow. And so that tells me that I can take the covered call up to this point in time, which is May 8th. From that point in time, boom, 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 the theta is going to drop off. So the theta chart is important on both ways. If you're doing covered calls, you want to be here and benefit from this drop. If you're buying a call as a speculation, you do not want to be buying a call in this area at all. So a June option, after May 20th, you don't want to touch a June option for speculation. So it's very important to know where the theta is. So if you want to take the trade sometime after May 20th, maybe you need to go to the July option, because now if you look at it, here's May 20th. Okay, the theta is still remaining flat. I'm not in this drop. I'm not in this waterfall area. This is what kills a lot of people. You speculate and you buy an option in here, and then you wonder what happened. And your theta is taken away 10 cents, 12 cents, 15 cents, 17 cents a day. As soon as the market closes and opens, you're losing that value. And nobody can sustain that. All right, let me go to the next question here. Okay, do you look at open interest for trading? On the open interest on the options volume, I don't have a good read on that. So let me talk to another expert friend of mine who trades with the options open interest, and I'll get back to you. How do you identify a trade? Okay, so a couple of things I can do. Let me do a simple scan here. I'm going to set it up in a second. Just give me 1 second. If I come in here and say, okay, so if I bring up, for example, SNR, and I'm going to take the options volume out of it for now, and I just put the TSL study on. I can see I have some strength in the TSL, not as much as I would hoping for, but let's add the LA wave turning points to this. And so what I'm going to do is I'm going to set it up on that day. So on this day, when I come in and I see that I have an LA wave turning point, the first thing I'm going to do is I'm going to look at the TSL and say, okay, is that agreeable? Yes, it is still strong. It's kind of close at the bottom level, so I want to be careful. Here's my entry points. The first line at the bottom, if I want to be aggressive, I can buy it then, or I can buy it when it crosses above that. All right. If I want to switch this to, um, you know, a signal bar level, then there's a signal bar level. So I will come in and I'll try to see if I can. So at this point in time, I have a positive confirmation. So if I'm trading a stock, I would buy the stock and put my stop at this dotted line, and then you would go about your business. The other way to do it is to see if you can get closer to the target or not. So let's say, for example, so this is historical, so I won't be able to set up a trade in this. But one thing I can do is I can come in and say I can right click on here, send to option chain, and it'll open up the option chain. So that was 327. I can come in here, go to 327. So I can see on this 327 that, I can buy April if I want. So let's look at the April and the May. So if I look at this price, it's trading somewhere between 20 to 55 cents for an at the money call. And that, or if I want to go next month, it's 35 to 65 with a closing at 45 cents. And you can see that the stock, rallied, and as it got in the target, it came in with the trailing stop. So that gives me a good. So whenever that is, so that gives me a good 2 to 3 times my profit of my entry point. So that would be one way to set the trade up. Um, did you have experience trading DT weekly options on 5-minute chart? Sure. I grew up trading the OEX. Um, let's move the options volume map, and we'll put this on a 5-minute basis. Okay, or if you want to, you can also go 15-minute, whatever you like. So if I put the TSL study on, and you have to kind of pick and choose your areas, and I'll show you how I, pick those areas. So if I come in here and I'm just focused on this particular area right here, I can see that I have a strong TSL that hasn't gone below zero, or hasn't gone into the neutral zone. It's still in that range. And I'm trying to get a signal, and lo and behold, I get a signal. So that, at that point in time, gives me an idea that I can probably buy a call to set up for the long position. That's Now, if you were to trade short term, so here's a 3-minute chart. You come in here and you see that this TSL is weak. And this is okay because that's telling me the TSL is still valid. So for this trade here, okay, that, if I do the entry based on aggressive or conservative, it is that. If I do the entry based on a actual signal bar, then that trade happened on this bar, and that time frame is 11:48. So I can come in, open up my options for SPY, and I'm trading a weekly. So today is the 24th. I can select the 25th, the 27th. Let's do the 27th, or even the 25th. Why not? Let's take a look at it. So the price that I would be wanting to sell is right about there, which is 266, 266.30. So if I want to go right at the money, I can come in here and select, say, for example, the 266 put. I can right click on that and say chart the option, and then change that to a 3-minute chart. And I can add the TSL if I wanted to. So I'm going to take the volume out of there and the open interest. And so if you put this chart side by side, that's the option. There's my stock. One of the things that we do is if you have two charts, it doesn't matter if it is the same or not. if you move the cursor in one, it moves the cursor in the other one. So I am trying to go short somewhere here on that bar. That's 1148, and you can see the cursor is also moving on the right-hand side. So I could come in and buy an at the money 266 put for 95 cents. And because this trade kept me in all the way to 1245, I can take that trade. Now, if you want to apply the LA waves just to the options, you can do that as well. You know, there it is. The TSL is strong. This is valid. I got a blue signal. Boom. There's my trade. So, I mean, this is a very quick example, but that's what it would do to take trades. Now, if this was a 5-minute chart, you wouldn't have got the trade because there wasn't any signal, unfortunately. So a 3-minute picked it up. And if you wanted to take the trade again at this point in time, that was the signal here on the options to buy that. There's another one to buy. So the sky is the limit. We don't limit it to any particular time frame. You can do whatever you want. All right. At this point in time, we have reached the 5 o'clock mark, and I appreciate all of you guys coming in. And if you have any questions, we will answer them for you. You can always email us the questions and so forth. And I hope I covered everybody's requests here. And if you haven't got the software, you really should try it, because it just is. It's a. The question is it recorded? I don't know if we recorded. Yeah, it is being recorded. So we'll take care of it and send you a copy. Okay. All right, folks. Have a great day, and good luck trading tomorrow.